right. So that was the reason why I said, I started giving out that assignments. All right. So for your own good, especially if you are new, if you are pretty new in trading, ensure you are doing those assignments. All right. So tonight we'll be looking at market structure. What is market structure? Having know what price action is, your ability to tell the story of the market. The question is, how do you now make money? So market structure is what is going to help you to, let's say you have determined on a higher time frame what the trend is. Let's say the trend is bullish. Market structure will help you to follow that trend. You can scale down to the lower time frame and be able to follow the trend. That's what market structure does for you. It helps you to follow the trend. It also, as you go deeper into market structure, you also see where it will also help you to know when to enter the market. All right, and also what to look for before you jump into a market. You see, the problem new traders, a lot of traders have, including myself, when I first started trading, is that you just jump into the market, without knowing, without knowing why you are jumping into the market, right? So market structure will help you to will save you a lot of headache, will save you a lot of drawdowns. That's another word I'm looking for. It will also help you to know when to enter a market and when to stay out of the market. Like somebody rightly said, he said, not taking a trade, not clicking or buy or sell to enter a market is also a decision. Because each time you click a buy or you click a sell, what you're doing is you are making a decision to enter the market. So he says, and the guy says, staying out of the market entirely, knowing when to stay out of the market entirely, is also a decision. Okay. So basically, so let's go. So today, like I said, basic market structure. The first thing we want to look at is just follow along with me. All right. So you have something like this. I think I explained this briefly last class, but I'm starting from the beginning now. For those that missed the last class, you can please follow along. So what we normally have in the market is that if you are pretty new to the market, what you always see is that you always see all these charts, all these candlesticks. They can be very confusing. They look like a wave. Is a wave. I've forgotten this mathematician that said the market is a wave, and I totally agree with it. So the question is, how do you follow these waves? If you ever been to the beach, you see all these guys that put a board on the water and they kind of flow with the water. The same thing we are trying to do. So we are trying to flow with this wave. So one of the things we'll be looking at, some terminologies that's going to help you. They are basic terminologies. They are just like ABC. When you start to learn the letters, when you want to teach a child how to spell a word, you don't just tell him to spell a word. You teach him the basics, and that's the same thing with market structure. If as soon as the child knows how to read A to Z, A, B, C to Z, then you begin to help that child to form letters. All right, so that's what I'm trying to do tonight. So I'm trying to let you learn the ABC of trading, which is the foundation of trading. So if you don't know the letters of the English letter words, ABC, you cannot actually put words together, right? The same thing with what we are doing tonight. So tonight we'll be looking at, like I said, market structure. So the first thing is we'll be looking at, what higher high, that's some terminologies we'll be looking at tonight. Let me write them out, then I'll be putting them in. So we're looking at higher high. What is higher high? I don't know if you, okay. We'll be looking at higher low. Higher low. Lower high. Lower low. Okay. So those are everything that I'll be looking at tonight. So from this structure that I just draw, so this is our so I'll be using HH for our higher high. Okay. Let me clone this so that it will it will help me to reduce me trying to type every time. Please follow along with me, okay? So I'll be using HL for higher low. It's not that hard, just follow along with me. So remember I said this market is like a wave. But as a trader, how do you now follow this market? All right, so that's what we're trying to do. So as you can see, this as price moves to the upside, what you have in this scenario, this is a bullish scenario. This is where we say the market is bullish. If you are new to the market, you'll be hearing people saying we are in a bullish season, we are in a bearish season, right? So you'll be wondering, what are these guys saying? So this is what they mean. So we say this is a bullish scenario. All right. So in a bullish scenario, we have price creates, a higher high. From example, this high price at this point is higher than this price. That's why we normally call it higher high. All right. As you can see, this is a higher high, this is a higher high, and at the bottom is known as higher low, higher low. That means as price moves up, all right, as price move up, each time price creates a new higher high, it comes down to create another low. All right, it comes into the previous low to create another low, which is known as the higher low. All right, and in this scenario, we said what? We said the market is what? Is bullish. Please follow along with me. In this scenario, we say, well, you can just drop I need to know you guys are following me. You can drop your answer in the chat box. So in this scenario, we said the market is what? Is bullish. All right. So this is a bullish scenario. Like I said, what we're trying to do is the foundation of trading. You are trying to learn the ABC of trading. If you don't know how to read A to Z, you can never know how to spell words, right? So, like I said, the alphabets, your ability to know what A to Z is will help you to spell words. The same thing we are trying to do. So, each time price move to the upside, it creates a new higher low, especially during a bullish scenario. When you have a bullish scenario. Okay. So for the bearish scenario, we have what looks like this. Oh, pardon me. I say. So we have what looks like this. And then this spot is known as our lower high, LH. And then we have that's our LH. Pardon me, this tool, I'm just trying to, so let me clone it so that I won't be, that's our lower high. So this is our lower high. And then we have another, so now we have a lower low, our LL. It's very simple, just pay attention. So you will notice that each time price move to is on the bearish, price is moving to the downside, and we have a bearish movement. What you have is that price keeps creating new low, all right, which is known as a lower low. All right, a new low known as a lower low. And in this scenario, what you want to do for the bullish structure, what you want to do, you want to be looking for buys. All right, you want to be looking for buys. All right. As price is creating new highs and new lows, what you want to do, you actually want to be looking for buys. And for sells, we are going to very soon we go into the chart so that you see what I'm saying. So that it won't be like I'm just teaching theory. We go and identify all these structures on the chart. So in the said scenario, when market is bearish, what you are looking for as a trader, your responsibility is to look for sales. All right. So let me clear this. I'm going to clear this. Then I'm going to look at, how these things are formed. Give me a minute. So we say, in a bullish scenario, market creates what? A higher low. All right. So you have something that looks like this. And then you notice that we have a new high. And then before you take your buy, you wait for price to come into the higher low. All right. So this is what you normally have. Price will come into what? Into the previous low, and then create a new high. All right. At this point, then we can now say, okay, the price is what? Market is what? We have a bullish scenario, and they will be looking for a buy. All right. Like I mentioned earlier, when you have a bullish trend, what you're looking for is a buy. It's that simple. All right. So let's quickly check in the chart. I'm gonna be quickly looking at the chart. Come with me in the chart. Okay. Am I on the 4-hour? Okay. Let's look at this scenario. Let me cut. Give me a minute, guys. I'm looking for this. Okay. So we have what looks like this. Price. Let me play. I'm just trying to describe, up to this point. I want us to focus on this point, all right? On this area. You see that price creates, there's a low here, all right? And then went ahead to create what? Another low here. You notice that this low right here is what? Is higher than this low. All right. So in this case, you say what? We have a what? A bullish structure. All right. Or a bullish scenario. Before I start using the word structure, I want you to understand what a higher high and a higher low is. Okay, let's look at in a bearish structure. So what we have is this. All right. Then we now have another. So we have market what? Creates. Give me a minute. Let me start this all over. There's something I want to achieve. All right. So in a bearish structure, this is what we have. Price creates a low. And then what? Creates what? A new high. And then creates a new low. So in this scenario, what are we looking for? As a trader, what should you be looking for? What should you be looking for? What should you be looking for? Can somebody, you should be looking for sell? Thank you, John. So what you're looking for are sales in this. This look quite simple, but if you don't understand this basic market structure, you find it difficult to learn how to trade. I'm telling you, it looks simple, like I said, like A to Z. It looks very simple, all right. But if you don't understand these basic truths about market structure, it will be, as you go deeper into market structure, you will be finding it very difficult. So I need you to pay attention. So in this scenario, you are looking for sell opportunities, like somebody just mentioned. You are looking for selling opportunities. You are trying to look for sell opportunities as markets, move up and down. And what you normally find is that at a point, market will do this, pardon me, let me do this. Market will do this, will create a higher high, okay, creates a lower high, pardon me, this is a lower high, then creates a lower low, creates a lower high, creates a lower low, creates a lower high, creates a lower low. Then it will now create an equal high, creates an equal low. Then you have a new high. At this point, we say, okay, the structure is about to change. We are still going to come to all this, all right? So, but then your ability to understand the movement of market as it moves. Don't forget I said, at the beginning that the market structure, you want to follow trend. You want to follow the market. So your ability to know what the market is doing. Oh, market is creating a new low. Market is creating a new high. We help you to follow through. So in saying that, the question now is that, how do you now, trade this higher low and this higher high and this lower low and lower high? Now, that's when we now go to the 3 types of market structures. The first one we're going to be talking about tonight, I think I'll focus on that tonight. Then we'll continue maybe on Wednesday. I don't want to put too many things in, especially for new people, folks that are new. I want to take it step by step. So the first one we're looking at today, out of the 3 types of market structure we have, is known as the swing structure. That's the swing structure. Then the second one, it is substructure. We have the substructure. And then we have the minor structure. All right. So these are the 3 types of basic market structure. So we look at the swing structure. Let me explain what the swing structure does. So the swing structure helps you to determine the zone at which you'll be trading at. Now, you have a bullish structure that looks like this. So with the swing structure, you are what? It helps you to look at the zone at which you'll be trading from. So from here to here, from point, let me label this place. I'm just going to label this place. Let me say this place is point A. Let me say this place is point A. And then this is our point. This is our point B. This is our point B. And this is our point C. Okay, this is our point B. So the swing structure tells you that, you already determined that the market is bullish. So what you want to do is that you want to focus on this zone. Your focus now will now be on this zone. I'm going to be showing you this in the chart. So from point C to your point A becomes your swing structure. All right. Your point A, from this point to your point C becomes your swing structure. So you want to look for opportunity. You want to look for what? Opportunity that looks like this. You are waiting for price. Don't forget that each time we have a bullish structure, what are we expecting? We're expecting price to travel back in. All right, into the higher low, which is point B. I hope I'm communicating. To form a new low, and then we're expecting price to do this. That's the basic market structure. We're expecting price to do this. We're expecting price to what? Come down to this new low. Don't forget, this is our higher low. This is our previous higher low. This is our new higher low. We are expecting price to travel down to point B before continuation. All right. So in doing that, let me explain. So don't forget that I said what? From point A to point C, this is our swing structure. In market structure, you understand the market structure. Please, I need you to understand the swing structure because you'll be using it a lot. If you are lost here, I'm very sorry. You might not be able to find yourself again. So just pay attention. Yeah? I'm recording this and I'll be dropping in the group. But even at that, before you watch the recording, try and understand this concept. It's a very simple concept. So from point A to point C is your swing structure. So this is, so in trading, when you identify that market is bullish, I'm going to explain how to identify market is bullish now. Now, in identifying how do you identify that the market is bullish? Let me clear this. How do you identify that the market is bullish? You identify that now, we have a new high. Let's say in a bullish scenario, we have a new high. You will not have a new high until there's a break of structure. All right. And I'll explain what a break of structure actually means. Is actually taking out the previous high. Don't forget that this is our high. This is our higher high. All right. This is our higher high. And this is our what? Our higher low. I'm going to be showing you all this in the chart so that you see what you see it yourself. All right. But then you will not have a new high until there's a what? There's a break of structure. So right here is our break of structure, known as, I'm going to name that as BOS. So right here is our break of structure. So right now, we now have a break of structure. Now, if you understand basic market structure, you will now know that, oh, this is bullish. This is a bullish scenario. So what are you looking for now? You are looking for, you already know that, okay, this is your support, or this is your higher low. So what you're looking for right now, you are now looking for price to travel, for price to what? For price to travel in to the higher low, to the previous higher low, before price continue the movement to the upside. I hope I'm communicating. All right. So now we have this higher low, and now we have a new higher low. Okay. And then we now have what? We also have a new higher high. All right. So you know that price is moving in that direction. Don't forget that I said at the beginning of the class that price moves in a wave. Okay. That price actually moves in a wave. All these things you are seeing on the charts, like I said at the beginning of this lecture when we started 3 weeks ago, that it is a story. But the question is now, you as a trader, how do you now follow this story? You need to follow it as it's printing, as price is printing. You need to understand how you follow it. And that's why we are talking about market structure today. I hope I'll be able to communicate this. So like I mentioned, this is swing structure. So quickly, let's look at what substructure is. Your substructure is within your swing structure. So don't forget I said we have 3 types of structure. We have swing structure, we have substructure, and we have the minor structure. I'm going to clear this. Let me clear all this drawing. All right, so let's go again. I'm going to quickly go over this again. So I said we have this. This is what we normally have. We have a break of structure. There's a break of structure. All right, then price travel back in and then break structures again. And then I said, now we already have a bullish scenario. I haven't said that. And I said this point to this point becomes your what? Becomes your swing structure. Point A to point C becomes your swing structure. But then for price to keep moving to the upside, we need price to pull back. And then this pulling back, this retracement is what is known as what? Is what is known as our substructure. All right. So this retracement is the substructure. And then don't forget that because we are in a bullish, we created a bullish structure. When price move back down as substructure, what we now have is we now have a continuation of that trend, which is now known as a minor structure. All right. I hope I'm communicating. If you understand what I'm saying, if I'm communicating, please just drop a message in the chat box. Let me know if I'm communicating. Do you understand this concept? So now we'll go into the chart. Before we go into the chart, because if you start going into the chart, you might find it a little bit difficult. I need you to understand. Do you understand this concept? Or you want me to just go over it again quickly? Okay, you guys understand. All right. Okay, cool. Okay, cool. All right. So let me clear this drawing. Somebody said I should go over it again. Okay. So for the sake of those people, let me go back. So I said, don't forget that in a bullish scenario, what we are looking for is buy. You're already looking for buy. And understanding market structure, what it does for you is that you already know what you are looking for in the market. So you are not trading blindly. You know what you are looking for. Don't forget I said when you have something that looks like this, all right, market already take out this structure. We call this a break of structure. So you are now looking for buy because you already established that this is a break of structure. All right. And then price will pull back. Price will always pull back after a break of structure. Price has broken structure here. So if it has formed a high, what normally happens is that price will always pull back down towards the previous higher low to create a new higher low. And then from there, price continue to break structure again. All right. And create another higher high. So, and I said, when price has done that, we now said from here, from this point, comes our new, becomes it becomes our swing structure. So this becomes our swing structure. From this point to this point becomes our swing structure. And I say, because price will always travel back in, so what we have is that price will now create a new low known as an higher low, which is your substructure. And then continuation on that trend becomes your minor structure. All right. So the same thing in a sell scenario, because this doesn't just happen in a buy. This doesn't just normal happen in a buy scenario. In a sell scenario, same thing every time. Every time we have a break of structure. So already we have a break of structure here. This is a break of structure. All right. There's another break of structure here. All right. So what we have is that we now have a higher high. This becomes your higher high. So that becomes your lower high. Okay. And then this point becomes your lower low. All right. So as price travels in, so from this spot, this in a sell scenario, from this spot to this spot becomes your swing structure. All right. So from this spot to this spot becomes your swing structure. And the price will do what? Will travel in. Price will travel in. And then create another lower high before it creates another lower low. So this move, this traveling back becomes your becomes your substructure. And this continuation of the trend to the downside becomes your minor structure. All right. So let's go and identify all these structures in the chart. Let me go to there's a, pardon me, I'm checking. Now, in identifying swing structure can be one of the most challenging part for a lot of traders. You know, in identifying swing structure, it can be very challenging. So your ability to identify it is very, very key. So now, look at what market did there. Look at what price did there. Price from a sweep. There's a sweep here. I'm still gonna maybe next week we'll be looking at this. We'll be looking at what sweep means. There's a support here. And then we have price move to the upside. Price moves to the upside and forms what? Forms a higher low. Have you seen that? It forms a higher low. It comes back, forms a new low, and then forms what? Another high, which is higher than this one. So this becomes a higher high. And then it comes here and forms a new lower low, which is so a new lower high. Higher low, pardon me, a new higher high, because we are in a bullish scenario. It forms a new higher high, which is higher than this one. All right, which is higher than this one. And then goes ahead to form a higher high. Can you see that, guys? If you are seeing my screen, let me know. Can you see that? So it forms a new higher high. So you can see that as price is moving in waves, that's what it does. Then it forms a new higher low. Then forms a new higher high. If I bring this out, you see that this movement looks like a wave. You see, it's in a wave form. Now, in understanding and in finding out your swing structure, I'm going to be showing you right now how you do that. All right, for example, if you look at from here to this point, we have a break of structure. There's a break of structure here. Price broke structure and then pull back a little bit. And then don't forget I said we cannot determine one of the ways you determine the new trend is that we must have a break of structure. So we have a break of structure here, and then which forms a high, and then it pulls back. Don't forget I also say price will always pull back to the previous low before the continuation of the trend. So price pulls back to this low, which is the previous low, to form a higher low. So from year to year, if we cut out, give me a minute. If we cut out, so if we, where are we? Where was I? Okay, I'm here. I think I'm here. Okay, so if we cut out this, if we cut out this side, that's from this spot, please pay attention. This part can be very tricky. From this spot to this spot becomes what? It becomes our swing structure. Don't forget I say at that point, you now want to focus on this zone. So you're now looking for buying opportunity on this zone. So you are waiting. So you are waiting for price to what? To come and form what? A new low, which is a higher low. And next week, I'll be talking about what do you look for? What do you look for before you take a position? Before you take a position, what do you look for within this zone, from this spot to this spot? So now your focus is from point A. Don't forget I said this is our point A and this is our point C. So your focus now is on this spot. Why a trader that does not understand what a basic market structure is or market structure is, does not know when should I take a buy. So people already know that this is a bullish scenario, but they don't know when to jump into the market. Some, as soon as they see a candlestick form, they'll go and some people can take a buy here. Imagine if you took a buy here. That means, price must have hit your stop loss before price continue, right? So let's see what price now does. Let's see how price pull back. Do you see that? This is the price now pull back into this low to form a new low. Now the question is now, next week we'll now be looking at when do you now take a buy? What do you see before you take a buy? We already have a break of structure. You already know that this is a bullish scenario. So the question is, when do you take a buy? All right. So now this is where you now say, okay, we already have a swing structure. This is swing structure. When do I now jump into a buy? If I continue, you will notice that price now comes back into that low and the trend continues to the upside. All right. So now let's look for a same scenario. Or let me go to the 4-hour time frame. In a lower time frame, you'll be able to see properly. We'll be able to see our swing structure properly. Let me remove all this drawing. Guys, I hope I'm communicating. I hope I'm communicating. Okay. All right. So this is a sell scenario. Let's look at a sell scenario. We'll be looking at buy scenario. Let's look at a sell scenario. You see that price already formed a high here. Then we have a break of structure here from here. We have a break of structure here. All right. Then we saw that price came down and look at this. Look at this. This is what price did. What we have here is what? Is a what? Is a bearish structure. So we are looking for sell opportunity. All right. Somebody that already know that, okay, this is our swing structure from this point to this point. I'm going to be explaining. I just want you to understand basic market structure first before we start doing algo market structure and how you can, what do you see, how you can take a sweep and how you can, take a sell. How do you take a sell? I want you to understand this, what basic market structure is first. So if you ignore this side, let me cut off that side. Let me cut off. So you notice that we have a we have a B, okay, and then we have a C. So this become a what? Our C. This become, yeah. From this point, just follow me, oh, please. Swing structure can be very, very funny. From this point to this point is our what? Is our swing structure. So now we are anticipating that price will move to the upside, right? So let's see what happens. You see that price went all the way back. Although this resistance was violated. Look for a better example. I'm going to look for a better example. I don't know if you guys are following me. A better example. All right. Here's a perfect example on the 4-hour time frame. Okay. I'm on the GPPU. Pounds USD. So we already have a sweep. Price. Book structure here. But this one has not traveled back. I'm looking for the one that. Give me a minute. Okay, this is the one. This one we just checked now, right? Right. Okay. Now let's look at this bullish scenario. We have price form a sweep. We have price book structure here. Notice what happened. Notice what happened. It came back and kept going up. On his way, if you want to take it in a more clear format, this is what we have. Give me a minute. Let me get this. Price came down and then continue to the upside. Sorry, my screen. Pardon me. Let me reduce this so that I can see. So that I can see properly to the upside. So this is what we have. So next week, what I'm going to be doing, I'm going to be explaining this continuation. What happened? What will you look for? And how you keep identifying structure as price move to the upside or to the downside. All right. So I'll be taking questions. I don't know if anybody, I can see somebody raise their hands. I see there's somebody that raised his hand. If you have any question, you can drop it on the chat box. Whatever you don't understand, let me know before we continue. Like I said, I don't want to boggle you with too many information tonight, though. So let's stop here. Let's stop here at basic market structure. Maybe on Wednesday we look at it again. I don't know if anybody have a question. Can you analyze this on the MT4? Yes, you can. You can. But I'll prefer if you I know that especially if I've been trading. Franklin that's asking, how long have you been trading, Franklin? I know that it's difficult to transition from MT4 to trading view. It took me a while too. The truth is in last year, okay. So I want to assume you are not used to trading view. Trading view is free. Sorry, you can go to tradingview.com to go and get you can go to tradingview.com. It's free. Just go there and so that you can understand it, because I'm teaching on trading view. If you are trying to draw this pattern, you can draw it on MT4. I do it on MT4 too. You can. Where can we see the pairings apart from Preto pairings? I don't understand. Okay, pairings. You mean the pairs? You can always see it on this side. If you click on this side. Let me stop recording. I'll just be taking questions. I'll take few questions.